This episode of My Two Satoshis is brought to you by BitGet.com. BitGet is one of the fastest growing derivatives exchanges with 1.5 million users worldwide. Available to U.S. citizens, BitGet offers USDT margin trading and one-click copy trading. With over $5.6 billion in trading volume per day, you should start trading with the fifth largest global crypto exchange today. BitGet.com. Link in the description below.
This my two Satoshis. Who need 2 cents when they can get double from stacking Toshis? Yeah.
It's your boy Crypto Blood, and welcome to another My Two Satoshis video. Today we're doing crypto news, and I've got one that you definitely need to pay attention to this whole video because Evergrande, many of you may have never heard of it, but it is something that really you should be paying attention to. It's not the thing that's going to crush the crypto markets and your portfolio, but it is a symptom of what's to come, in my opinion, when it comes to external risk, right? Bitcoin, cryptos are risk-off assets. You have to remember that. What I mean by that is if things turn south, if things go bearish in the economy, if we have a reversal, we start to head into a recession, Bitcoin is not an asset that you want to flee to or the markets perceive as a safe haven. It is a risk-off asset as well as any other asset that we have currently, equities, bonds, you name it. It is risk-off. So you have to understand that that will be the case if we have a reversal in this fake propped up economy. The Federal Reserve had a meeting today that I think personally was a catalyst in us seeing a move back up in the markets. In addition to some of this Evergrande news as well, that was positive. I like to always cover these types of things from a non-crypto perspective, news outlets and resources, because they give a more or less tainted view or skewed view of what's going on. I'll give you an example of that in today's episode, but we will be talking about Evergrande and this whole fiasco. If you guys don't know what Evergrande is, it is essentially the second biggest real estate group in China, and it is ranked 122nd on the Forbes list. It is incorporated in the Cayman Islands and headquarters in Shenzhen district of China. Founded back in 1996, and it sells apartments mostly to upper and middle income dwellers. And so today's episode will be solely about Evergrande and what ripple effects it has caused in the equities markets, specifically in the cryptos markets. This is important for you to watch out for and know how to assess and position yourselves going forward. So that's what we're going to be talking about today. Nothing more, nothing less. So stay tuned to today's episode of My Two Satoshis, all about Evergrande. All right, so let's get it. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. So to kick this episode off, I want to go over the broader crypto markets. As you guys can see, there is a big bounce back today. Heavy green for most of your altcoins and most certainly Bitcoin. It is up 6.2% today, trading at 43,345 bucks. Solana is up big, 17%. It's trading at 145 bucks right now. DOT is up big today. Most of these coins are up bigger and higher than even Bitcoin is. And that's typically what you see in this market, the crypto markets. The altcoins are usually going to get slammed faster, but also to the contrary, recover faster than Bitcoin. So that's where we are with things. I do want to show you guys technically where we stand because this is important to me. As you guys can see here, we had a slam down over the past few days here, starting on September 17th. And as you guys can see, from peak to trough, we saw a whopping 18% move down in Bitcoin over 3 days. And it was all over the Evergrande situation, in addition to some other things maybe I'll touch on as well. But primarily, it was Evergrande. And I always try to reiterate to you guys, markets look for reasons to continue a trend in either direction, up or down. So that's what we have, in my opinion, happen here. If you recall the huge sell-off we saw on the 6th of this month, September 6th, big drop, right? We bounced right off the top side of this channel we've been in for over 2-3 months. So that was the start. So we saw a recovery. People thought, oh, that was just a blip. It's all over. We're going to continue our way up. No, that was the actual start of this decline, in my opinion. And if you take this trend line here, I know I'm going to play hindsight here, hindsight trading. But if you trend this out, really, if you were paying attention, you would have gotten out of these markets back here when we saw the first break of this trend line on the 30th of August. Now, we did break back above here, but it wasn't a clear and consistent or continuous trend move above this trend line. So, that would have been, if you were paying attention, the first indicator of momentum slowing down in the upward direction for Bitcoin coming out of this channel. Okay. But at any rate, we did do another break below this trend line on the 7th of September. And that should have been your final indicator as to a shift in short term, a shift in Bitcoin. So right now, we have a new trend, in my opinion, we have to look out for. And it starts from this peak and these waves that we've been seeing here heading downward. So really, the most upside if we even see this, would be a dead cat bounce up to this trend line, which puts us at about $46,000 Bitcoin. That will be the most we will see in this extension if we even get there. I'm highly skeptical of that happening, to be honest with you. I think us seeing a clear break of this upper bound of the channel is, to me, a very bearish signal. Even though we've come back above that green line, I really think that we're going to see further downside in the next coming weeks with Bitcoin. So you want to, in my opinion, start selling into this bounce, this recovery. You call it dead cat bounce if you want. I would be selling into these recoveries, because ultimately we're going to head back down into the channel and continue further down. So that's my technical analysis on Bitcoin and ultimately the crypto altcoin market as well. We all know that Bitcoin is still the bellwether, and we have to use that as a barometer for the overall health of the crypto markets. It just is what it is. I don't think that's the fair way to gauge the crypto markets, but we have to do that until things change. So I think we're going to see further downside in Bitcoin. You need to really protect yourself and your portfolio in a way to sell into these small rallies that we're seeing. If you see a breakout above $46,000 Bitcoin, then the narrative does change, in my opinion. But as of now, I would be on the sell side of things because I see lower prices for Bitcoin in the alt markets as well. And the reason is of course, Evergrande. Again, I told you, the second largest real estate firm in China. We have to pay attention to what's going on here. They are in dire need of a bailout. Looks like they're almost like a Lehman event for China. The good thing is, contagion wise, we don't see this, or I don't see this being a situation where it's going to spread globally, because this is a company that is primarily in China, and their finance and debt and everything is based on yuan. It's based in yuan. There are no counterparty risks going on here as far as any of their debts being denominated in like US dollars or anything else. So from that perspective, I think, we're fine. And that's one additional reason why you're seeing a recovery in the markets, is because initially there was a panic about what was going on and if there was going to be contagion. But it doesn't look like that's going to be the case. However, if you look at Jim Chanos said about this whole situation, he kind of echoes this point that Evergrande is not really a crisis in itself. It's a symptom to the issue that China has right now with property-driven growth models coming to an end. We all know about all those ghost towns in China, ghost cities. Well, he says that this is just a symptom of many other companies in an Evergrande situation. He said there's lots of Evergrandes out there in China. Evergrande just happens to be one of the biggest ones. He said, but all of the developers look this way. The whole Chinese property market is on stilts. Evergrande is the world's most indebted developer with over 300 billion in debt outstanding. in recent months, a liquidation panic of the company's bonds sent its 2023 bond rates from 90 cents on the dollar to just in June 26 cents at present day. And in recent weeks, the collapse has spooked markets, including global equities, credit, FX, commodities, and also crypto, as you guys can see. And so leave it to the Cointelegraph to tell you, hey, everything is all good with crypto markets. The Fed commits to printing more money. That was done today. The FOMC came out that they're going to essentially leave rates where they are, even though 18% participants of the Federal Open Market Committee, the FOMC, believe that the rates have to rise next year. And so in addition to that, today they announced that the tapering of its bond purchasing program may begin soon. So they're going to taper the amount of money or bonds they're going to buy, which basically props up the market and keeps things skewed, like everything is okay, but we know it is not. So these are the things you have to keep in mind. If they actually go on their word and actually do start tapering their bond purchases, this is going to be a negative effect on equities markets, the bond markets, of course, and also crypto. So we're talking about a 6-month window here that we need to watch in potential short-term either pause in growth with the crypto markets or an actual reversal temporarily, until I think the Federal Reserve will then reverse their position again, like they did in 2018 and in 19, reverse their position and start buying bonds again. I think they are stuck in a corner. They've painted themselves into a corner, and I do not see them being able to actually taper their bond purchasing program for an extended period of time. They're going to have to walk back that decision, in my opinion. But that still means that you may see a pause or a reversal in the overall macro direction, I should say, of the crypto markets, equities included with that, right? So I think we may have some headway here in the next few months in regards to cryptos in your portfolio. So keep that in mind. Cointelegraph tells us that everything is fine. Crypto market stages a roaring comeback after Evergrande makes a deal to pay its debts. That is not true. What they actually did was unveil a vaguely worded plan to pay interest due. Okay, and that is not paying the debt back, leaving the fate of the $83.5 million offshore bond coupon payment in limbo. So this is a can-kicking exercise that they're doing. They are not, from what you read as a headline from Cointelegraph, they have not committed to pay back their debt. That is not what's going on. So again, you have to read outside of the crypto media ring to really get a full assessment of what's going on. Of course, every outlet is going to have their agenda and their spin, and cryptos are no different. Crypto media outlets are going to have their spin to make cryptos look like the best thing ever and you're okay, don't panic. So just keep in mind that Evergrande is not paying back their debt. They just have plans to pay back interest due on Thursday. The negotiations that they made to do an off the clearinghouse move or resolve it off the clearinghouse did not specify how much or when it will pay the 232 million yuan coupon at stake. So it talks about here that the language is potentially ominous because under no normal circumstances does Chinese bond issuers simply transfer money to a clearinghouse to complete payments. This off the clearinghouse approach usually means direct but delayed or partial payment to the bondholders. There could even be a lower interest rate involved. In short, it's one way to avoid being called a defaulter. So that's really what's going on here. It's a lot of can kicking, and it looks like they are essentially defaulting, but not in the direct way. And back to Jim Chanos, which is a legendary short trader, said that, there are others out there like Evergrande in China, but far worse because it's symptomatic of a whole economic model and the debt that's behind the economic model. He goes on to say here, if you try to deflate this bubble, it is fraught with risks, though he doesn't think they're contagion risks. So this is going to be, in his opinion, kept within the China economy, and something for a Chinese Communist Party to really deal with, not anything that the rest of the world will have to deal with. But it just shows you, like, ladies and gentlemen, that this is a situation that will continue to occur. And we don't know if the next person or the next company does have debt that is denominated in dollars that could cause a kind of cascading event here in the United States in the equities markets. But again, we've seen a bounce back in equities today because of the FOMC decision to not change rates. And consequently, we've seen a bounce back in the crypto markets. I've told you guys many times before that the crypto markets are very, very highly correlated to the equities markets. So really, you have to keep your eye on the equities markets to figure out the mid to short term direction of the crypto markets. So this is my urgent message to you, is to be very cognizant of what's going on in the equities markets, because they do affect what's going on in your crypto portfolio. I think that the crypto markets were just looking for a reason to continue the trend downward towards 20,000 or near it before making a massive move back up. In my opinion, I'm still sticking to that argument. We're heading toward $20,000 Bitcoin because we need to test the all-time high. I'd rather test it from this price point rather than all the way at 100,000 coming back to $20,000 Bitcoin. So let's see what happens. Give me your feedback in the comments below. What do you think? Do you think this is going to make us head toward the $20,000 Bitcoin, this event with the Evergrande? And we've got crypto regulation that is coming down hard from the SEC. They're trying to really stifle the growth of the crypto markets as well. That's another catalyst that I didn't talk about in today's video. Maybe I'll talk about that in another video. But do you think this is the reason that the market's needed, right? It just needs a reason to move in the direction that it ultimately was going to anyway, short term. Do you think the Evergrande is that reason, or do you think we're going to shrug this off and continue higher from here? Let me know in the comments below. I would love to hear your feedback on that. That's pretty much it for today, though, ladies and gents. Thanks for tuning in. Make sure you guys like, share, and subscribe, and click that bell to receive more videos like this. I'm out of here. Ha!